like Hong Kong, maybe that's still kind of happening. In Southeast Asia, maybe that's just taking off, right? E-commerce, I mean, that bubble is like already burst and now it's coming back again, right? It's going into vertical. So I mean, every kind of sector, every industry is at different stages of development in different markets. And so only in that way, I think that in Hong Kong, a lot of things are still starting, right? So I think that there is a lot of opportunity here. And I think judging from, or just, I guess, just coming from like the different deals that we've looked at in the last 4 or 5 months, I mean, I'm personally excited about things like SaaS, like e-commerce, things that are consumer-oriented. I know fintech has been something that's been really hyped up here, just because, I mean, it's been traditionally sort of been like a finance hub. But to be honest, I haven't seen that much in the way of quality startup stuff.
I'm looking for fintech investments. If you know some good ones, please.
There you go. As are we.
So you're hard to find.
So maybe him first, then us.
De-risk it for that.
De-risk it for us, yeah.
Emmanuel.
Yeah.
But yeah, no, yeah.
I take a different approach where it's not only just about the type of startup company, the comparison of like startups in the West versus startups in the East. The other half of the equation is investors in the West and investors in the East. Right? I find like in Asia, generally speaking, the companies out here think about, well, what would an investor want to invest in? Let's go and create the company on that basis. Whereas in the West, again, generally speaking, it's about, well, let's try this new idea, no matter how far-fetched it's going to be, because the investors are more willing, in the West, are more willing to take a chance on those ideas. Whereas here, there needs to be validation, because investors out here, I think, tend to be a lot more conservative. So, and I think that's what creates the volatility in the market, where let's take something that everybody knows, like social media, right? So there was this thing called Facebook. And it seems, investors out here are seeing it on the news, they're seeing it in the paper, they're seeing it on TV, and oh, this is kind of interesting, it's growing, but there's nobody out here doing that, so let's monitor the situation. And of course, it gets bigger, and it gets awesome, and it gets big. And then investors out here are like, okay, we need to raise a fund, or we need to deploy capital, we need to put more resources toward looking at this space. They're not getting in here, they're getting in up here. And by the time they deploy capital, when it starts to starts to go this way and everything starts blowing up, the investor out here like, what did we do wrong? We thought this was on the up and up, right? So I find that investors out here, they get in a bit late because they need that validation. By the time you get that validation, it's like really late in the game, right? Or let's say, the company that is looking at something big out there like a Facebook or like a Groupon, and we know at some point they're going to come to Asia. Why don't we create a company that looks exactly like theirs, so that when they come out here, they're going to buy us? Right? So I find out here, the companies out here think about the exit before they create the idea, because they're looking at it from that perspective.
Last question before we open it to questions. What's the best investment you've made, and then what's the worst investment you've made?
The worst investment I made is not making the investment. I once met a guy named Jack Ma. And this was back when I worked at a larger fund. This is back in year 2000. And he came in, and he had this pitch deck, but you have to take into context that back in year 2000, everything was blowing up, right? And we managed the Hong Kong government fund. We managed money for GIC in Singapore. And we were and then PCCW wanted to take their money back because now they had a venture arm. So we were going through all of this, and at the time we managed $230 million US, which in 2000 was a lot of money. And we invested in 50 companies, and it was one big party, right? And everything was just blowing up, and things are bad when you have to go. We have our quarterly meetings with the Hong Kong government, which was the Applied Research Council. And things are bad when your boss calls you up on the morning of the update with the government, and he calls in sick, and he tells you to go instead. And then you got your little name tag with the microphone there, and everybody's there, and they're all kind of like, "What are you doing with taxpayers' money?" It's like it's horrible. So that was the situation that I was in, but I was the gatekeeper. I was the one responsible for reviewing all the business plans that came in. And because it was Hong Kong government money, we couldn't turn down any business plan that came in. Right? So we were reviewing all of them, and same with Singapore government. So I was basically the gatekeeper for all these business plans. And I met this guy named Jack Ma. He only had, I think, like 20, 25 people in the company. He was looking for funding. And there was just something about the team that we talked about where I just felt he had that execution capability. And I wanted to champion the deal, and I brought it to my investment committee. And the partners of the firm were like, "Yeah, but how do we know this is the company?" And it's really hard to relay that or convey that in a pitch deck. It's like, well, here's his pitch deck, or it looks like everybody else's pitch deck. But I just felt like this was the one. But in the end, the partners decided, okay, we're not gonna, we don't want to do this, and that's one of the reasons why I wanted to set up my own fund. But that was the thing where it's like, well, it's this je ne sais quoi that you just feel like you just know that this guy has that capability. You want to do it, but and then instead, SoftBank came in. They put $12 million in the company at the peak of its Hong Kong IPO. I think their stake was like over $2 billion. And I asked Chauncey, who was the main partner in the SoftBank China Fund, and he said, "Oh, well, why would we cash out? We're going to take this company and all the other companies under it, Taobao and Alipay. We're going to spin those out, and it's going to be potentially even bigger than Alibaba itself." And of course, the rest is all history. But I find like that was something that I'll always be punching myself for not having the ability to do it. What's our best investment? I think it's the one that we just invested in. But the ones we've done in the past is mobile payments, where we invested in a company that basically takes the similar type of technology on the Octopus card, but they put it onto the SIM card. So if you take your phone and do contactless payments. In the end, we sold it to China Mobile, and that was sort of really good for us because we got in at a very early stage, and we brought that company to commercialization. But the one area that I really like now, it sounds weird, but once you start thinking about the numbers, and you're like, wow, this is pretty significant, is electronic cigarettes. And it is probably the most disruptive technology. It's probably the biggest thing that's happened since the internet. And when you do your research, we can talk about it later, but it is massive. And we think we've invested in the right company with that.
Yeah. I think, any investor who's been around long enough, they're going to have like this huge anti-portfolio, we call it, right? Everything you didn't invest in. And it's just going to be like all the best names because the only names that go on are the ones that made it, right? So we've definitely, we've definitely had our fair share. Other than those, we've also had companies that whose founders have died, and founders, we had companies where like we sold it and then they ended up suing us. And then we had companies where like the money just kind of was taken away and we couldn't find the founder anymore, right? Like all these things happen in China, and you just gotta. And then there's like fraud stuff, but that's all like pretty, everyone kind of runs into that. So I think that there's always like the bad companies that leave the deepest marks. I think good companies, we've been around long enough, so, we've had IPOs, we've had like sales as well. The best companies are always, as Derek mentioned, the ones that we just made, right? Because there's still the uncertainty factor, there's still the story behind it.
So the best companies I invested in is where the founder had a singular. I was thinking through all these. It's great to be last because I get to think the most. So it's where the founder had the most conviction and extreme passionate and highly technical. That's just my preference. And so the best ones are the ones where I had the pleasure of backing them, and not only through just money, but through time and emotional investment and friendship, right? Because I learned a lot as well throughout the whole experience, right? It's not just the fact I'm putting money, I'm learning something about AI, I'm learning something about mobile, I'm learning something about email communication. So it's a two-way street. So those are by far the best investments, where I put in money and time and emotional energy, but I'm also getting a lot in return. And so Mainframe is one of them. They're the ones that are going to raise a large round. Linguist is another one. It's a language learning platform. The founder, Mike Muntel, has a brain the size of a small planet. You can actually literally see the moons around it because there's a gravitational pull. He's an ex-CERN guy, one of the 5,000 authors of Higgs boson. You know, he's intellectually sounded. Yeah, he's awesome. So those are the founders I've had the most pleasure backing. And Rodolfo from Weave, who's trying to do an AI as a mobile OS. The ones that were ahead, my anti-portfolio is probably, I thought about this the other day because I blog quite a bit. I was going to write something about my anti-portfolio, and I haven't yet because they're all women for some reason. And I was like, shit, I'm going to open up this bag of worms about not investing in women. That's not true. I think it's where I didn't have the conviction strong enough where I pushed it as far as I could go, but I wish I had the conviction and the power to push it even further, right? So either I couldn't do it, either Tech Service wasn't willing to do it, I should have done it myself, or I helped the founder raise and put in as much as I could. I didn't have the conviction strong enough. So two of them were, there's three, and I forgot who the third one was. First one was Kathy Han from 42, which is a retail analytics platform for luxury brands. So they work with Louis Vuitton and Prada and whatever, and be able to kind of see in-store analytics of what people are doing and how they're shopping, etc. Incredibly passionate woman. She just insane networker, but in a very, very sweet way. Very driven. Very. She can just rally people around her. Again, I didn't have the conviction to bring her in. And the other one is Urska. I forgot her last name, but she's the CEO of Bellabeat. So Bellabeat started off as a kind of baby monitor, so you actually, mothers can actually monitor the babies. Now they're actually just analytics for women's health. So IoT devices, but for women's health. Both of them went to Y Combinator, but again, they all raised quite a bit and are successful and stuff. So those two are my anti-portfolio.
A friend of mine is a certified idiot. He turned down Bill Gates at the very early stage, not once, not twice, but 3 times. So, questions?
Thank you. First of all, thank you all for your information. Very